Hi everyone, welcome to a weekly trading recap video. My name is Aman and this is SMC Wolf FX. This is a trading recap for the week ended 7th of August 2026, closing in at a total of 7 trades, just under 4R at a win rate of 71%. So this was the first trade taken in the week on US30 on the 5-minute time frame during the London trading session. A bit of an unfortunate one, but did walk out with a little bit of a profit. My analysis on here was fairly simple. Up towards the highs at 52,900, it was basically targeting the Asian highs. I didn't have it marked out on this chart here, but at this level, it was pretty much Asian high liquidity. As the PA opened up for the morning session, we swept the lows and then started showing bullish price action towards the upside. I looked at this area as a order block at hold price level 52,800, and we started trading towards the upside. I did initially put my rolling stop loss at break even, and then after further breakages towards the upside, I engaged it at 52,825, assuming this would have been the low. But what happened here is, of course, price came back down, took me out, and it left a nice long bottom wick and did end up going towards the target. So a bit of a annoying one, but it happens. And moving on to the next trade, which was on the same day. So on the Monday, I took 3 total trades. I think I closed out at plus 0.3, but yeah, it is what it is. Anyways, this is GBP USD taken during the New York trading session. Got 1.5 on it. It was a manual close. I'll explain why shortly. So analysis fairly simple. We traded down into a 1-hour fair value gap. Looked at this, assuming this to be a liquidity sweep area, and then we started trading towards the upside. Oh, by the way, I don't think I've mentioned it. 15-minute time frame. Anyways, I took 2 positions on this one, so sized in a little bit. My first position was, the first one was actually here at this level on an impulse, based on the assumption that just in case we don't retrace back into this order block area, I'm not missing out on anything. But we did retrace it back into the order block area, where I did take my second position. However, when I went to the 5-minute time frame, and even also looking at the higher time frame, it was a bit of a risky one to take, only because of this trading pair being on a bearish higher time frame cycle. We traded up into this bearish 15-minute bearish order block, well, assuming it's a bearish order block, and then I saw this 15-minute have a flat bottom candle. I'm not a fan of flat bottom or top candles because I feel like price will come back to that area, either retest it or trade way past it. So I took a quick decision to manually close out of this trade as soon as price was basically at this 15-minute order block area. And that netted me a total of 1.5R on this one. And in the third trade for that trading day was a loss. It was on gold. It was unfortunate. It was on the New York, again, during the New York trading session. All of the price action, it looked good. I was targeting 4-hour highs and assumingly equal highs. I assumed price to done a liquidity sweep at main quarter price level 4,050. I entered back on the retracement, back into this order block, but price did not respect that area and went straight to stop loss. But it happens. It's all part of the system. And then moving on, 4th of August, so a new trading day. This was again on US30 5-minute time frame during the New York trading session. It was a manual close. So I went in for a, what is this? A bearish bias. I know it's not a pretty looking chart at all, but on the New York Stock Exchange open, I assumed this to be the liquidity sweep tapping into hold price level 54,000. And then we started trading towards the downside, leaving imbalance in the form of this 5-minute fair value gap right over here. Again, I took 2 entries, 2 positions, so sized in a little bit on this one. First one was on the tap in into this 5-minute fair value gap. We started to retrace higher, going back to these wicks, and I thought we could have a potential reaction. So I went in with a second position right over here, and then we got nice bearish candles, and I didn't really hold it for long. I took out all of my positions off at quarter price level 53,750, but this was mainly due to market timing. This was at UK time, by the way, 3:30 p.m. I like to work in 90-minute trading cycles. I won't explain it in this video, but if you want to try and understand how trading cycles work, you're free to drop me a message on either social media, on my Discord or whatever, and I'll try my best to explain it to you. But basically, I took my profits here, and across these two positions, I netted a total of a positive 1.7 R on this specific trading setup. And on this trading day, 4th of August, that was the only trade I took. Now, on the 5th of August, again, just one trade on this day. It was a negative 0.3 R on GBP USD during the New York trading session, so on a rolling stop loss. Analysis, again, it was fairly straightforward. I assumed this to be the liquidity sweep. We also broke above some equal highs, and then we started trading towards the downside. I entered on this candle here, so again, pretty much an impulse entry, assuming this is a 5-minute fair value gap. We should respect this area and continue trading towards downside, which we did. We went past 50% off target, breaking these previous lows, so the trade looked good. However, we started trading back towards the upside, and I did also engage a rolling stop loss above these highs here, assuming they should remain protected. But yeah, got taken out on rolling stop loss. And from memory, this trade, well, GBP USD did continue trading up higher, so it would have been a full stop loss trade if I did not engage rolling stop loss. So I was fairly happy with that, and yeah, that was quite systematic, but came out at a small hit, which it is what it is. 6th of August, again, just one trade again on this specific day. This is NQ, or otherwise known as US 100, taken in the New York trading session. Analysis was very, very straightforward once again. I was a bit disappointed on this, but I'll explain why. This was taken before the opening bell, around, I think it was 1:30 for me in the UK, and opening bell is 2:30 p.m, so 1 hour before the New York Stock Exchange opening bell. The target looked fantastic. You had Asian highs, trendline liquidity, and quarter price level 29,500, which was my target. The price traded into a 4-hour fair value gap, so a hard time frame points of interest. You also traded below the Asian lows, and then I started seeing bullish price action, and you had this 5-minute fair value gap where I did place an entry from. And what happened here was I placed an entry, price basically stayed in drawdown for a little while, and then came back to break even. And then I saw there was this 5-minute order block here, and I just decided to swallow my pride on this one and just come out at break even on this. I did put a rolling stop loss, but I was like, yeah, it's not looking too great. There's no guarantee this will break above, so just took it out. The reason I was annoyed about this setup was because when the opening bell happened, so at 2:30 p.m. UK time or 9:30 a.m. New York time, price did wick below again. It's still staying around this quarter level, 29,250, and then it showed beautiful bullish price action. But however, the price momentum was too quick, and I missed out on this, and price did eventually end up going towards this specific target here on this trading day. But it is what it is. You win some, you lose some, and sometimes you miss some. And then finally, for the Friday, again, just one trade on this day, New York trading session, taking on NQ US 100 on the 5-minute time frame. This was a manual close at 1.5. So analysis was very, very straightforward. It was pretty nice. So the London trading session was bullish. As we got into the New York trading session, the opening bell caused price to trade towards the downside, taking out liquidity into 4-hour lows and 4-hour fair value gap. After showing some bullish price action, I simply entered on the retracement back into this 5-minute fair value gap. That's all it was. And then price continued trading towards the upside, and I decided to take all of my position off at whole price level 29,700. The reason for that was simply because we came towards the end of the day. It was about 5 p.m. for me here in the UK, and I was like, you know what, we're nearly at the highs. I'll happily just take it off the table right here, and that gave me a 1.5. And across all those 7 trades, we came at 3.8 R for the week to close. So yeah, it was not a bad week to start off the week. Sorry, just repeated myself there many times. But again, if you found this video format useful, where I go through all my trades and just tell you my logic behind taking them, then let me know in the comments. Give it a thumbs up. And if you're not subscribed already, hit that subscribe button. And I'll leave all of my links below in the bio, because again, I trade all of these trades live in time with my Wolfpack Discord community. If you're interested, I hope to see you guys in the new week. Otherwise, I'll leave it there, and I hope everyone has a lovely weekend and a good reset so you can come back to the markets feeling refreshed. I'll see you guys later. Bye-bye.